Okay, and here we go. Part two of the Alta report specifically on Bitcoin released in January, around the 13th, I believe, 2017 by Cliff. He's given me full permission to give you the entire report, not a summary. This is the full report. Interesting details here on Bitcoin, silver, and gold price movements, etc. It's fascinating as hell. Part two. If you have not seen part one, don't even start here. You have to go to part one because it's literally like reading a book, stopping halfway, creating a part two. You don't want to start on part two to go back and read the first part of the book, right? This is in chronological order. So here we go. From these shorter term sets, we get the progression of the price action from the linguistics. The timing is another matter. Within these sets, the range of timing error range that can be as much as 4 months. The current timing has clues in the form of the temporal markers for cascading bank defaults on derivatives as well as interest rate jumps. Further, the background for the Bitcoin price moves includes currencies crisis escalating to bank problems in Southeast Asia POP that will in turn induce traffic problems in Southeast Asia ports and terminals. Other temporal markers include language for an Israeli financial spasm that will have impacts on USA pop markets. This last has some other temporal markers that would seem to place it in mid to late February 2017. This then could likely be the period for Bitcoin to be making its step through the gate of $1,088 that leads to a striding to $1,448. These sets, new to processing for 2017, are continuing to grow in supporting positions for Bitcoin, being an integral part of the Beijing to Berlin railroad expansion from China POP over these next very few years. As this is occurring, the data has long-term values indicating that 48,084 won per coin, again that's around 7,000 US dollars, will be a temporal marker of note. This price is showing as being in place when Bitcoin becomes used to settle corporation trade agreements. It is at this price point that the data has both the big push towards 80,808 won to the Bitcoin. So that's even about double that, right? So you're talking about $13,000 or so, if that's the case. The data set for Bitcoin, 13,000. The data sets for Bitcoin show that 80,808 won is going to be a very stable price for a period of longer than has existed to that date. That's interesting to know, because if anyone's thinking about trading it, selling it, and getting lower, it's suggesting that when it gets to that level, which is already insane, it's going to be pretty stable for a while, longer than any other while we've waited, okay? Within the USD price of Bitcoin, there are several instances of $5,000, again, USD level drops. So within the US price of Bitcoin, there are several instances of $5,000 level drops. These are supporting within the data sets with large primary holders who will be selling in order to allow corporations and nations to settle debts. The 5,000 USD drops in price apparently are reflecting the time it takes for the Bitcoin coins to flow into the market. The idea coming across is that nations will require Bitcoin, and private holders of whole coins will be magnanimous to national interests and sell at a discount. The data has the USD price of Bitcoin being over $40,000. That's US. The data has the US price of Bitcoin being over $40,000 when the $5,000 price drop occurs. As of this point, we have these price drops within our longer term data sets. Thus, our timing clues are saying something less than 19 months. Please note, if you are new to our reports, that forecast temporal markers can shift forward in time within our model space. This occurs as a result of the new data sets bringing in new emotional values. The alternative of a forecast shifting back in time in our model space has not yet occurred. We do have forecasts that fade away and that they do not continue to receive new supporting sets, which causes these linguistic sets to drop off model space as we progress it forward in relative duration. The expectation in our work is that the details about the timing of the $5,000 drops will increase as we move closer to those events in time. So he's suggesting it could be 19 months, but it could be pushed out a bit. I'm going to stop for a second. I want you to remind you of something. The 1988 cover of The Economist magazine. This is the club's magazine. Get ready for a new world currency. It had a gold medallion on this phoenix rising from the ashes of burning paper money. And it was all the world's different money currencies, not just the US dollar. And it said 2018 on it. So if the club is ready to go with this sounds absurd right now, doesn't it? But if they're going to push that, whatever the hell world order, whatever they plan on trying to do, and 2018 is the year, that falls in place absolutely with this 19-month period. And that might just be the start of it when things start to get even more crazy, and then we start to get up to these $40,000 Bitcoin levels. Can you imagine that? The sets for silver, gold, and the US dollar are all piling on volatility language from mid-February onward, with some spectacular rises in March of 2017. Okay? The sets for silver, gold, and the US dollar are all piling on volatility language from mid-February onward, with some spectacular rises in March of 2017. So is that saying the US dollar too is going to do a spectacular rise? Or is the volatility just attached to the US dollar along with gold and silver, but the spectacular rises are specifically to silver and gold? That I don't know. But to be honest with you, I don't give a crap if the US dollar went up a bunch along with gold and silver. Normally when the dollar goes up, gold and silver prices are going down a little bit. This is presumed to be directed by the very large growth in the interest rates as a financial problem data sets. The idea from the data is that the March and April moves in the prices for Bitcoin, gold, and silver are all being affected by the increasing volatility within the currencies and financial system emerging into the global public consciousness at that time. Some sets within the Bitcoin, gold, and silver sets have April 2017 being much more emotionally dramatic within the pricing action, as there are some new data sets for a tax reaction within the USA population that will spur or propel new Bitcoin purchasers into the markets for the first time. Now, I don't even know if I want to make a suggestion, because this doesn't even sound right, but it hit me just now. A tax reaction and people jumping to propel people to go buy Bitcoin, that sounds to me like you get a tax that you don't get taxed on Bitcoin, it's like you do in the stock market. You got to pay taxes on that money. You made capital gains, yeah, okay, you got to pay taxes. Oh, you did it on Bitcoin, it doesn't count. I mean, what does this mean? It doesn't sound right, not in this country, but I don't know what else to say. So anyways, as may be expected, the data sets have much chaos in the banking sectors, including global derivatives, also being temporally linked to Bitcoin price increases. These price increase sets are also found within the gold and silver sets, as model space is moved through February, March, and into April. Within this period, our model has a breakdown in the suppression of the price of silver occurring. Now, that's interesting. Within this period, our model has a breakdown in the suppression, where they rig the price, of the price of silver occurring. The breakdown is described within the data as being brief. This may be mere hours or days, but it is unlikely to be weeks. However, the breakdown creates what the data sets are describing as a strange market condition in which silver as a USA price and strange market condition in which silver has a USA price and a global price. Further, there are suggestions that the USA price is, over the course of a few months, going to be institutionalized as the officialdom, will forbid the sale of silver outside U.S. borders. There are also numerous sets about the negotiations for silver with Mexico that are going to be deep, long-lasting, and ironic, as the Mexican government is described as playing the USA officialdom against the Chinese officialdom. This could be to get back at Trump, right? Who knows? During this time, the data sets have the beginning of the street price quotes, as in what it costs to obtain silver in your hands, as diverging from the officialdom quotes. The rate and range of the divergence is described as both rapid and reaching several hundreds of US dollars. So you can turn, oh, what's the silver price today? Let me go check the Comex or go to Kitco. What's the price today? Oh, it says it's $50. Well, that's funny. I can't buy any from any of the majors, any suppliers. Their premiums are $50. They're saying it's worth $100 plus the premiums. What the hell's going on here? Excuse me, you call them up. The price of silver today is not what you're asking, and we understand that, but we no longer go by that. We go by what people are willing to pay. That's what I could see happening. That would be the only way to explain this. We're not going to take a beating because the official paper price says it's $100 today. We know it's $150 today, and that's what we're charging. Okay? Or if there's some kind of law where agreement that they set up, not a law, but maybe an agreement they set up somehow that you have to use the spot price, yada yada yada. They'll use the spot price. Oh, it's $50 today, but the premium's $100, $150 silver. They could do that. In spite of the brief description for the breakdown period for silver price suppression, the data has very long-term consequences persisting within the USA and its markets as a result of the bifurcation of the pricing for silver. The lying banking sector, as in lying bastards, the lying banking sector will insist that its system is both intact and functioning, even as the media are reporting continuously about how broken it actually has become. This period is coincident with much political and organization chaos within the USA and its power elite. And as you know, recently with the Hillary Clinton thing, global initiatives going down, the whole foundation's probably going down because countries have now pulled almost all their money out as far as giving to that organization. They're done. Talk about the power elite chaos starting. The examination of longer-term value sets, which go out to 19 months from the period under discussion, can prove very useful in setting an expectation framework. The longer-term sets are not temporally accurate as the time component shifts, as noted previously. However, the linguistic structures within longer-term data have proven to be very accurate over these past 20 years of this work. The current longer-term sets have Bitcoin reaching into our 80,808 yuan per Bitcoin, or yuan per Bitcoin, within 2018. Also, 2018 the year. Also within these sets for mid-2018, we have gold being revalued at an officialdom level. So officialdom's going to revalue gold, you say. Don't think it's going to be revalued lower. I'll tell you that much. This language is less than clear. The language for silver shows a global and persistent level of emotional excitement about the quest for silver. These sets and others are in supporting positions for the general meme of parity in price between silver and gold. Again, that's 1-to-1 ratio. This is showing up as being due to the unique nature to stable, naturally occurring isotopes of silver and its ability within the new technologies to hold a field. These sets are arguing in favor of the revaluations for silver as being quite shocking to the general population as well as the sophisticated investor. The former are indicated to be scrambling for old jewelry and silver plates. These sets are new to very long-term sets that have held out the creation of a network of silver mongers who will daily walk through the population seeking to buy silver. Anyone got any silver to sell? Because Cliff High said a while back, you're going to see, remember the commercials and people, we buy gold, and You're going to see that, but it's going to say we buy silver. We buy gold, we buy silver. Signs, people flipping them out in the streets, like they do now in some of the new housing developments. They're flipping the signs, dancing out there to get your attention. New houses, new condos behind me. Yeah, top of the market. Come on and get in. No. You're going to see someone out there flipping a sign that says we buy silver. Or, as this is calling it, silver mongers. I love that term, and I will be an honorary member of a silver monger, even though I won't be out there asking to buy silver. But I could see a business thing happening right now with these kind of prices for silver, where someone comes in and has this junky old silver and you're giving them $300 for it, and they're like, oh my God, are you kidding me? Nope. Are you happy with that price? Oh yeah, I'm happy. Have a nice day. What's the silver price? What's that worth? Oh, it's worth about $500. So you just pulled in $200 off that person. Correct. I could see some businesses happening. So then again, these silver mongers who will daily walk through the population seeking to buy silver. This aggregation network of millions of people has had sets in our data for over 5 years. Model space has Bitcoin and gold and silver all rising along with the US dollar. So again, that thing earlier, I guess it is the dollar that's going to rise with them too. Albeit for a brief period that is being shown as mid-January through to nearly the end of May. The data has the dollar going into the currencies crisis along with most other currencies from May onward. So we might just see a mediocre small rise in silver and gold in the next few months, and along with it, the US dollar remains king. And then we start having problems with the dollar. That's what it sounds like. The data sets have the rising prices in gold, silver, and Bitcoin separating from the currencies very rapidly thereafter. So that would be May and after. Again, if this is right on the timing. This point of separation is indicated to be temporally coincident with a shakeup in the new Trump administration. The accretion patterns have bifurcation of price occurring for Bitcoin, gold, and silver from mid-February through March. So some kind of shakeup in the new Trump administration. I wonder if some of these guys we were all upset with, why is he getting this freaking Wall Street dude over there? Why is he getting the oil guy, Is that the shakeup? We can get rid of some of these guys? I don't know. But keep an ear out, and remind me if you see this happening. There's any kind of shakeup from the day Donald Trump takes office, anytime after that. Oh, he's changing out that cabinet member. He's taking that out. If you hear that, you send me an email. Go to realistnews.net, contact button, and contact me. I'll get the email. And it will remind me, oh yeah, WebBot. You can just say WebBot hit, remember, whatever. Okay. I want you to also try to remember, if you hear the words emergency banking meeting, emergency finance meeting, etc., like I said earlier, that's a precursor, temporal marker. I'd like to know about that if I don't happen to catch it. Send me an email if you catch that. As model space is moved through the end of January into about the 12th of February, the immediacy data sets grow in support of a fight around the global view of Israel. These data sets, and as you know, they're trying to divide the land of Israel as we speak. Anyways, these data sets have this being a full-on battle between the propaganda prostitutes, former mainstream media, and the new media. That'd be people like me and some others. We're out there trying to tell the real truth, not trying to propagandize you. Within these sets, there are numerous subsets in support of the idea of a coordinated Israeli-led effort within global markets. The details suggest that within this background action, primarily indicated to be algorithmic trading battles, there are to be emergent price moves for Bitcoin that will be slightly divergent from, but in the same upward direction as gold and silver. The data growth patterns are suggesting that shares markets as well as derivatives will be part of the upward pressure for gold and silver through May. These sets have language that suggests a breakdown of the ability to suppress the price of silver. These sets are specifically silver-focused and also specifically reference a breakdown that will last for a brief period. The aftermath is described as several days of gaps, followed by fills and pushdowns that are then followed by yet more gaps and more pushdown. The breakdown language has temporal markers for prices at $22, $25, and $35. The implication is that the price suppression will be a fighting retreat up a hill, as is described in the data. So that's interesting. The breakdown language has temporal markers. This is silver, right? For prices at $22, $25, and $35. The implication is that the price suppression will be a a fighting retreat up a hill, as is described in the data. Thereafter, the suppression takes a decidedly woe-begone emotional tone as they are continuing to fight upward pressures. These sets have the breakdown only lasting perhaps mere hours, but taking days to control. But thereafter, the silver price will not be pushed back to lower levels, and each day is a battle to merely cap the rise. I'm going to have to stop here for 1 second. Well, there's a few sentences. Let me finish because I just thought of something that's very important. The above referenced prices as numbers are the only ones presented prior to $125 and $345, followed by $600. These are all USD prices. At the same time, the price for Bitcoin is described as a rocket. These sets for rapid gaps and backfills is against a background of yet more language for cash bands gone bad. These sets are suggesting that the population reacts to yet more edicts from the financial elites by fleeing the financial system in many different countries, all of which continues to pressure prices globally. So let me read that one sentence, and then I'm going to tell you what I was just about to say. These sets have the breakdown only lasting perhaps mere hours, but taking days to control. But thereafter, the silver price will not be pushed back to lower levels, and each day is a battle to merely cap the price rise. Okay. I think the year was 2014, and I believe it was at the very end of November or very early December. The CME group, that's the commodities market, right? Precious metals, the club, Chicago Mercantile Exchange, added some new rules that they've never, ever in their entire existence of the COMEX market had in place. If gold moves $100 and I don't know what the trading period is. I think it was 15 minutes, so I'm just going to say 15 minutes. If it moves $100, goes up $100 in 15 minutes, a stop is automatically triggered on trading, a halt. Can't trade it for 5 minutes, whatever it is. Okay, a few minutes. Okay, you can trade again. If it does it again, $100 again, up. Time out for everybody. Happens again. That can happen 4 times in a day, apparently. So that's technically $100, $100, it's $400 move in gold. You know, it's not that easy, but just bear with me. You know, not that down to being that, $100 and that's it. It can move all over the place. But anyways, silver, same thing. They had to put one in for silver. And it's essentially, 4 moves throughout the day of $3 or more. If it hits $3, because it was a $12 total amount, I believe. So if it moves $3, stops, halts are triggered, done. Not stops, but halts are triggered. Market halt, can't trade for a certain number of minutes. Now you can trade again. Up $3 again, boop, halt is placed. And I said then, this is now 3 years ago, and I said it then, and I've mentioned this numerous times. I have not forgotten about that. The club always puts stuff in place for a future that they know about. It's going to happen. And I told you then, I'll say it again now, there's not a chance in hell that they put that in place to save you, that if there was a adverse market crash of gold and silver, you wouldn't get cleaned out. They want you to get cleaned out. It's their job to keep you away from precious metals. They're not going to help you. But if the price is going to rise substantially and they know it, they'd want to cap that. And that's what I said then, and I'm saying it now. They'd want to cap it as best as they can. So there's a shooting off rocket. We've got to contain this thing. Up, halts are triggered again. Let's try it again. Market's open again. Oh, up, another halt. But it supposedly can only happen 4 times in a day. So I can see where $20 a move silver comes into play, if you know what I mean. Okay? A little bonus thing there from Jason Up 4. Have not forgotten about that rule change, or not even a rule change, the added rule that they put in place. And have we seen any moves like that where these halts had to happen? Absolutely not. Everything's fine. The markets are stable. This is normal. Okay, we'll see about that. As model space has moved through 2017 into 2018, the data has the shift movement in prices of all asset classes to become a defining headline to this new century as the greatest wealth transfer in history. Let me read that to you again. As model space has moved through 2017 into 2018, the data has the shift movement in prices of all asset classes to become a defining headline to this new century as the greatest wealth transfer in history. To me, that sounds like price shift, as in not looking good. All your so-called assets, paper assets, they've just been destroyed. Markets have crashed. And the club has come in to scoop it all up like they always do when there's blood on the streets, to get it pennies on the dollar. And then maybe the markets go back up and the biggest transfer in wealth in history. That's what we're going to see. Those holding on to the remnants of the global financial industry and all its slaves, such as pharmaceuticals and oil companies and entertainment and armaments, are going to discover in 2017 that they had bought into the Roman Empire just at the top. That is suggesting what I just said. Oh, you thought you had an asset? There might be a war. I'm going to go let me go buy into Halliburton, Blackwater. Let me go buy into some of that shares. Oh, it just took a crap and collapsed on me. These assets devalued sets. I guess I should have read this part before I opened my mouth. Sounds like it's exactly what I was saying. These assets devalued sets include references to a wide number of things, but all share the same conditions of being valued in debt-based currencies. It is the debt-based nature of the currencies that shows as being the core issue in the currencies crisis now unfolding globally. Gold, silver, and especially Bitcoin are all indicated to get very large notional boosts in prices over spring and summer, Northern Hemisphere, as the debt-based currencies take very large drops in relative purchasing power due to hyperinflation from truly massive quantitative easing. It is this large and growing set for hyperinflation that has such details supporting it as 125,000 Dow Jones. So what I don't understand is 20,000 Dow market crash, and then now 125,000 Dow. 125,000 Dow. Does that mean massive market crash, devaluation, blood on the streets, everyone's crying, club comes in, scoops up all the profits, all the assets, paper assets, whatever, markets start to rally again, while reason behind it, dollars are hyperinflating, and anytime a dollar hyperinflates, that country stock market goes up. It still might be the equivalent of 5,000 Dow. I don't know. These sets are likely not referencing an actual daily close for the Dow at that level so much as they are describing the language coming out for hyperinflation that will lead to general headlines predicting 125,000 Dow Jones. The data has late August 2017 as a temporal target for the big tranche of currencies creation. The currencies creation will not go well, and by late in winter, Northern Hemisphere, the data shows that currencies crisis to be fully dominating news of the day for weeks on end as systems become unstable and begin failing. The response to failing systems shows as being more currencies creation, which yields more populist reactions, including yet more purchases of Bitcoin, silver, and gold. We note that there are a number of sets indicating that this will be done against a background of intense political attacks on the Federal Reserve cabal. Again, note that the words cabal and criminal will be within the language about the Federal Reserve at that time. There are other sets pointing toward governments, including in USA Pop, actively seeking for alternative currencies in the summer through fall Northern Hemisphere of 2018. These sets may be forecasting the end of the Fed as we know it over these next 2 years. So he has kind of a final word. I'll go ahead and finish with that. Riding the Dragon. This report is titled Riding the Dragon to reflect the pricing action for Bitcoin over 2017 and into 2018, as the data is indicating the price action for Bitcoin will require the skills necessary to ride a dragon as Bitcoin escalates and then consolidates its way through this next year. All of our data sets show that Bitcoin will gain both relative value and real value faster than gold or silver. This is also being described as including some very frightening and amazing falls and then recovery points along the way. Our data has these 2 years as being a great revaluation of all things. These sets have the US dollar going up relative to other debt-based currencies through the first 4 months of 2017 in an irregular but generally upward direction for a few spectacular downward drops, followed by retracing of some of the loss. The upward pricing trend for the dollar is not reflected in Bitcoin, gold, or silver, as all those show the dollar to be weakening across the whole of the year. Thereafter, from the end of March of this year and into March of 2018, the data has the US dollar then faces a series of rapid shifts both up and down relative to other paper currencies, which also be in crisis mode. Against the developing political crisis as a background to the debt-based money deflation crisis, the data sets present Bitcoin, gold, and silver all reacting in a predictable way as a store of wealth against fading debt-based currencies. Stated another way, the data sets have Bitcoin, gold, and silver becoming more valuable by the day through these next 15 months. This will be in spite of the further attempts to control the price in US dollars. The control is forecast to be breaking down over the first 3 months, such that a retreating action is being waged by the manipulators from April onward through the year. In reading the data, my opinion is that the retreating action is not an attempt to hold the line, but rather at some point in mid-May 2017 becomes an attempt to cushion the blow or soften the landing or manage the transition. The retreating battle for the price control of gold and, more importantly, silver shows within the newly processed data as being spikes followed by retreating controllers dumping debt currencies. Part of the supporting sets point out the irony of the retreating controllers ending up increasing deflationary pressures by converting gold to increasingly large amounts of debt. This last is a complex set that is speaking to shortages and manipulations of the paper contracts and how that market will set that is speaking to shortages and manipulations. Hold on, I think I just read it twice. This last is a complex set that is speaking to shortages and manipulations of the paper contracts and how that market will fail to control much past April 2017. From that point onward, in order to stem the wealth flow, those within the financial system are described as rooting around for any gold, silver, Bitcoin to sell into strength. The data sets provide for 2017 to end with Bitcoin, gold, and 17 to be at very much higher nominal and notional numeric values when expressed in debt-based currencies. What is much more significant is that the data has Bitcoin, gold, and silver ending 2017 as acknowledged money within the global population, including the truth-starved population within the USA and dollar-dominated empire. As the longer-term data is examined for early 2018, we can note that a wealth transfer will have already begun by March of 2018 that will include a global repricing of all things humanity produces. This is only partially described as being related to debt-based currencies crumbling under deflation. Other influences are discussed in the Alta report for February, expected to be available by the 5th of that month. So the next Webbot report or Alta report is hopefully, he says, going to be out by the 5th of February. I'm just going to say I have a sneaky suspicion it's going to be far juicier than the one in January. Not this one. This is fantastic, but the one I just did before, the summary, which was fantastic. And I said, this is one Webbot report I think you're going to want to get, was the title, I think, of it. Just from what's happening, and it's the massive, he was telling me through email, the massive change in language that the bots are picking up is producing like essentially a whole potentially not necessarily different kind of Webbot report, but just there's so much different language now. This could be a very, very interesting Webbot report coming up in February is what he's saying. So he says, tighten your spurs, grab the reins, and let's mount our dragons. 2017 greets us now. So if Cliff High hears this right now, I want to personally thank him for allowing me, and for anyone else out there wanting to copy this, because I know people are copying my videos and putting them up on their own channel. This is not one of those videos you are allowed to copy and put up on your channel, whether you give me credit or not. This is specifically for me only. I was able to get that done as far as me getting approval from him to read this in full. He let me do it. It originally started off where I wasn't going to do a summary at all. It has now turned into, you know what, Joe, go ahead and read the whole thing to everybody. Go for it. Fantastic. I love that, man. Okay. So to all my peeps, I got one more video to do for the day because I spent so much time on these two Webbot videos I just did, and that'll be it. All of this will be in the playlist. As I always put them in the description box, the playlist link. It'll start off playlist video 1, Webbot 2, and then go into my third video, which I'm not sure what that's going to be yet, but I'm about to find out as soon as I open my email. Take care.